Are you a veteran or service member looking to use your VA home loan in Hawaii? Well, I've got news for you. The VA loan is one of the most powerful financial tools that you have at your disposal, especially in the market like Hawaii. High price points create high investment opportunities, and the VA loan could be your entry into that investment market. Today, I've got Ross Asato on our call, and he and I are going to talk about the VA home loan and how to use it properly in Hawaii. There's a lot of different things that can go very right or very wrong when buying a home in Hawaii. And we're going to set you up for success if you do choose to buy a home here in Hawaii. All right, so quick introduction, Ross. Let's start off with you, man. Tell us a little bit about yourself. Tell us a little bit about your background and what you do.
Hey, what's up, Ryan? Thanks for having me. Been in the lending business for a few years now. My father did serve. I know you know the story already. He served in the Army. My three uncles as well served in different branches, mostly Army. Four siblings, many houses bought and renovations and refinances, but unfortunately none of them were VA loans. It's during the time that I was a young guy, so I wasn't even in industry yet. But it's just unfortunate that so many people have the ability to utilize the VA loan program, but haven't.
Love it. Oh, if you don't already know me or you haven't already watched one of my videos, my name's Ryan Adams. I'm a 14-year Army veteran. I'm a serial VA home loan user. I like to call myself that. I've used the VA home loan a bunch. I know all the ins and outs. And my favorite thing in life is helping veterans, especially veterans, really anybody, but especially veterans, maximize the potential of using that VA home loan. There's a lot of stuff going on in the real estate industry, and I don't love to see it. And I love to see when people are taken care of. People are not always taken care of. So that's my main goal and my mission in life is to make sure that everybody that I meet and I interact with that I'm going to help through this process is taken care of and is making the best decision possible. Ross, I know you said that you don't have any experience in the military yourself. You've got a family background, but for everybody out there, I've thoroughly vetted many different loan officers. And I'll tell you what, Ross is probably one of the best and one of the ones that I trust the most out of everybody that I've worked with. I've worked with some really good loan officers. He's a real down to earth, no BS kind of guy. So if you have loan needs in Hawaii or specific questions about loans, or maybe like you're looking at, oh, well, I need to fix my credit. That's a thing that comes up a lot. Reach out to Ross. He can help you out. He can help you get on the right track. So
Yeah, I do view ourselves as educators, right? And it's learning the product. It's really reps, and it's not really, your specific background, but it's really, have you done enough reps to understand the guidelines and the rules well?
exactly. So getting into the video, the actual purpose of the video, we're here today to talk to you a little bit about using the VA home loan in Hawaii, specifically Hawaii.
Hmm.
It's going to be vastly different than anywhere else you bought a home. Well, let me caveat that. The Navy's got a couple places. If you were in San Diego, it's probably pretty similar to that. There's a couple different off assignments that you probably have some high costs homes. You've got some high cost markets in general. So you're going to be, when you come to Hawaii, a little more attuned to that. But if you're coming from a duty station like Fort Bragg, North Carolina, Fort Campbell, any of the smaller markets that have lower price points, it's going to be quite different from what you experience in those markets. And Fort Bragg was where I first bought my first home as a single lieutenant, fresh out of Ibolic and Ranger School. I bought my house. Some guy in patrol base in Ranger School was like, "Hey, buy a home when you get to your next duty station." I'm like, all right, cool. And I just kind of grabbed that, hung on to it. And coming to Hawaii, it was a little more scary. I had a boss that was like, "Well, I would never buy a home here. We're in a housing bubble." I'm like, all right, cool. Well, I'm going to go buy my house anyway. Because I realized the investment potential just given him what I had been through. So Ross and I are here to help you with that. So let's recap the VA home loan a little bit. Leroy and I talked a little bit about it and some of the experience that we had using it on my last video. So Ross, just real quick, wave tops, what is the VA home loan and what makes it so powerful?
Well, it's the strongest loan product out there to utilize, really. The VA sets the guidelines for the program, but they don't actually do the lending. And that's why you're working with someone like me that can do the lending for veterans and utilizing that VA home loan program. But the VA, again, just sets the guidelines. They don't actually do the lending. And so they back up the veteran by 25% of the purchase price, or the loan amount, I should say. And even though the veteran is not putting any funds in, so no down payment is required, you can do so if you wanted to, but none are needed. And it's because the VA backs up that loan amount by 25%. So if for some unfortunate reason that the veteran defaults, the VA guarantees the lender 25% upfront. And so even though you're putting no money down, it looks as though you are putting down 25% down. And that's why VA loans gets a better interest rate, no private mortgage insurance, which other loan programs do have if they're not putting down 20%. And that's why, it's such a powerful tool because of that lower interest rate and no private mortgage insurance.
Of it. So those are the big ones. And another one that Leroy and I had talked about, and you can expand on a little bit, credit requirements, right? So the VA itself doesn't have any credit requirements, but we talked about some different lenders have different things that kind of guide that. Can you talk a little bit more about that?
Yeah, so they don't have a stipulation of a definite number of what the VA's, guidelines state, but every lender has their what we call overlays or what they're comfortable with, right? Because ultimately your credit score reflects on your responsibility of paying back borrowed funds, right? So besides the credit score, there's, late delinquencies, foreclosures, bankruptcies, etc. And so every lender has a kind of threshold of what they're comfortable with lending. I mean, they are lending typically 100% of that purchase price. So they do have different levels of comfort of where they want to borrow to, prospect home buyers, right?
Love it. Now, Hawaii, it's a pretty expensive market. Is there any limit? Like, what's the limit that you can go to when you buy a home here in Hawaii?
So it depends on your entitlement. If you have full entitlement, if you've never used your VA home loan before, or you have and you sold the home, or you refinanced out into a different loan program, which means you have no outstanding VA loan, you have full entitlement. And in Hawaii, there is no loan limit. It's really subject to your income and debts. That's what's going to cap you on what you can buy. If you do have a VA home loan out somewhere else and you're trying to buy with a second tier entitlement here in Hawaii, then we do have a cap. And that's going to be, well, cap on zero down, I should say. It depends on how much entitlement is used in that first VA or that outstanding VA loan, and then what the county limit is here in Hawaii. In Hawaii, we have a higher county limit, so it really depends on where you're purchasing, what state, what county, because those limits will vary depending on where you're trying to buy. But in Hawaii, currently we have a loan limit of 1.209, and that only comes into play for a second tier entitlement. But if you have, again, full entitlement available, then there is no cap. You can go 2 million zero down if your income and debts make it approvable.
Love it. So for people like me, I already had, before I got into this home, I already had used the VA loan once prior in Hawaii. And I took out a second loan and had to navigate that circumstance. And Roth knows because he did the loan
Yeah,
for me.
I was going to say we did it together.
We did it together. If you're somebody, say you have somebody coming from whatever duty station, say they're coming from North Carolina and they used 500,000 on their loan. And we're going to talk about market stats a little bit later. But, sneak peek, median sales price in Hawaii is over $1 million for a single family home. That puts you about 1,500,000, pretty well past that conforming loan limit. Is it possible to still buy? Are people able to use that VA home loan still?
Yeah, so it depends on how much entitlement is charged on that outstanding VA loan. So I pull your COE or certificate of eligibility from the VA portal, and it tells me exactly the number of entitlement that's been used in that VA loan. A lot of buyers that I speak with, they tell me, oh, this is the outstanding loan amount, or this is what I bought it at. It really doesn't give me a specific number. I would need to pull the COE to get that exact entitlement number that's reflected on the COA to do my calculations. But if that's still an outstanding loan, we take the county loan limit. So right now it's 1.209750 divided by 4 because the VA guarantees 25% of the loan amount. And then I'll minus out that entitlement still being held up in that first VA loan. And then once I have that number, I multiply it by 4 again to find out what the max zero down purchase price in Hawaii would be. You can purchase over that max zero down, but then it's not going to be a zero down anymore. So it's going to be 25% of the difference of that difference, sorry, for a down payment. And there's a lot of calculations that go into it. I do it all. So if you have questions, I'm more than happy to pull the COE and figure out what number that's going to be for a max zero down in Hawaii, because it is a lot to remember.
So with that being said, if you're going to come in with a down payment, why still do it? Sounds pretty complicated. What's the benefits?
I mean, still, you're getting a better interest rate, right? So that's the bottom line, is that you're getting the better interest rate. You're not needing to pay private mortgage insurance. I know we're going to talk about condo approvals later, but that's a lot easier with the VA guidelines versus other loan programs out there.
Love it. And to cap this section off, why is it so powerful? Why is using the VA home loan in Hawaii such a powerful, I guess, sought out thing? There's a lot of people that come here and they're like, oh my God, I have to use my VA home loan in Hawaii. I've experienced that a lot. Over the moon about using it in Hawaii. What would you say is the power?
Supply and demand, plain and simple. I mean, we've got a lot of people here. and we don't got a whole lot of inventory. So it's all about supply and demand, and home prices, not guaranteed appreciate, but if you look historically, it's really, really nice. And the earlier you get in, the likelier better you step out. The longer you hold, the better the gains look.
Yeah, honestly. Realistically too, just the price of the market. The price of the market's so high. Like I said, it's gonna, we're gonna talk a little bit about market stats later, but our median sales price for single families are in excess of $1 million. Somebody else that doesn't have that VA loan accessible to them, they're coming in with 100,000, 200,000 to buy that home that they're looking at versus, you coming in with zero down and still getting a better interest rate than them. That's real power right there. It's something that can keep it a little bit more affordable and help you actually make an entry into this market and make the right decision. So like I said, we're going to talk a little bit about market breakdown. That's about this segment right now. So market stats in Hawaii. We just pulled the stats for November of 2025, and we break them down by single family and condo. And we've got the median sales price plus the number of sales. So if you've been tracking the real estate market at all, you know that it's pretty rough right now. Interest rates are pretty high, especially given the cost of homes. Is that a bad thing necessarily? What do you think, Ross? Like what do you think about interest rates right now? Do you think we're in a bad spot? What are your thoughts?
I think there's pros and cons of every market. I went through the COVID market where interest rates were low and a lot of people were getting beat out by other bidders. But right now in the quote unquote higher interest market, even though we're lower than our peak, there's still right now, because we're in winter season and Thanksgiving just happened and we got all the holidays and New Year's coming up, it's a little bit quieter, but the sellers still need to sell for whatever reason that they need to sell. And I think that's when buyers still have the upper hand to negotiate better. And you can negotiate, the seller to take care of things. And I think we're going to talk about that later, but you can get a lower interest rate than what the market currently is given without you having to pay for it. There are different strategies that can be used to get a better deal now versus if those are waiting for the rates to come back down, which hopeful that they are going to come back down. But, that's when a flood of buyers are going to hit the market again. And if you're competing for one house with 10 different people, how are you going to make your one offer stand out from the 10 others that are offering? Right. So I think we have pent up demand. I think we have a lot of folks that are kind of scared of the market right now because of where the rates are. But if you can get in a great deal now and refinance when the opportunity arrives, besides, and kind of getting away from bidding wars that may happen in the near future, I think people will be better off.
I love it. So yeah, I mean, I think you hit the nail on the head too, talking about the cash aspect and when the market flips, if it ever does flip, once that buyer demand starts going back up, because as the interest rates come down, buyer demand is very likely to go back up. Can't say we'll ever see twos again, but say we do
Yeah.
get into threes or low fours,
Unless we're upside down.
right? Honestly, but if we get into twos or the threes and low fours, even around that area, you're gonna have a lot of people coming in. So right now, if you're not a cash heavy person, you don't have a lot of money to come in with a down payment, but you have the steady income and it's going to be there. Now's the time to start looking, hey, how do I get the easy entry into into a home, whether it's Hawaii or anywhere else? The ability to negotiate not just price, but for credits, like Ross was saying. And we touched on all the things you can do with credits on the last video. Ross will touch on it a little bit more later in this video, but there's tons of different things, tons of different reasons to buy in this market. And if you are ready to buy in this market and you're already kind of through this video and you're thinking, cool, like this is all good to know, I'm pretty much ready to buy. After you're done watching, go ahead down to the description, click on our Calendly links and schedule a meeting with us. Schedule a call. Let's get a one-on-one and we'll help you make the blueprint for what the right way to go is through this market. So getting into the stats a little bit, single family homes are performing phenomenally. It's kind of like, it hasn't really gone down as much as the rest of the country. It's due to that resilience that Ross was talking about. There's a lot of demand. Only about 10% of the island can be built on. Most of that land is already taken up. And right now we're sitting at a $1.1 million median sales price for single family homes here. That's as of November 2025. And we had 241 sales in November of 2025, which is actually up almost 20% from last November. So to think,
Yeah.
wow, we're in a shitty market, to be frank. Interest rates suck, but single family homes here in Hawaii are still, generally about the same price as they were when we were at the peak of the market in 2022. And Ross, were talking about this earlier. November of 2022 was about when everything kind of peaked with interest rates and prices started to come back down. We started to see some more negotiability. I think we saw fours in the interest rates for my buyers over that summer, and then fives in the fall winter timeframe. It's crazy to think that we're so close to that. It was 1.153 in May of I think it was May of 2022. It was 1.153, and we're at 1.1 now. Despite the market being the way it is and interest rates being the way they are, we're still pretty close to that. It's a super resilient market in the popular markets in Hawaii. That being said, obviously those stats are driven by the popular markets and kind of diluted by some of the not popular markets. And that's something important to remember as you go through your process of buying a home here in Hawaii is, where should I buy? Where should I not buy? Because buying everywhere in Hawaii is not always a good idea. There's going to be some people out there that tell you that buying anywhere in Hawaii is a good idea. Just get your piece of paradise. There's so much demand. That's not true. I'm going to be the first to tell you that's not true. So find yourself somebody that's reliable. If you don't already have somebody that's reliable, feel free to reach out. We're going to leave our socials in the description as well. We've got all the information you need, whatever you want. If we don't have it, we're going to reach out and get it for you. So feel free to reach out and we'll get you on the right track. That being said, we're going to dive in a little bit into condos, touch on a little bit of condos, and then we'll go into some shortfalls a little bit later in the segment, and we'll talk about some of the dangers that you see with condos right now. Condos are pretty rough. Right now, the median sales price is $487,450. That's down from about $530,000 last year. There's 316 sales in November of 2025. That's down about 7% from November of last year. And there's a couple different major drivers to that. But I will say that that's not all inclusive. Just like you're looking at different neighborhoods in your single family areas, condos are the same way. It's going to vary by building. It's going to vary by area. It's going to vary by type of condo. If you're looking at a townhome, that falls under the condo umbrella. They're going to perform a little bit differently than your high-rise condos in Waikiki that are 50 years old and have $1,000 a month HOAs and $500 a month assessments. So there's a lot of different things that you need to assess. If you can't get into the single family home, it's not the end of the world. Most people right now can't get into single family homes. If you are in the condo market, you just really need to do a deep assessment and be a little bit flexible on what you're going to purchase and make sure that you're not going to purchase something that's going to drag you down later on as you either look to sell it or rent it out. So that's a little bit on the market stats. Let's talk a little bit about BAH working with your VA loan and all the other different entitlements that you're going to get coming out here to Hawaii. Ross is an expert on this. He deals with this day after day. So Ross, what do you got? What can you tell us about how BAH works, how all these other entitlements work? And then even if you want to touch on for the veterans out there, VA disability, some of those things that contribute to the income that you can use for the VA loan.
Right. For any type of loan program, we're looking at qualifying income. And so with active duty, of course, once you get your orders to Hawaii, we can use Hawaii BAH numbers, right? So wherever your duty station is, we're not using that number. If you're already going to be PCSing into Hawaii, I'm going to be using Hawaii BAH numbers, right? We're also going to have COLA, your BAS, and of course your base pay. But all those different allotments, the BAS, BAH, and COLA, I can actually gross up because it's non-taxable income. So I can qualify you for even more. It's going to be dependent on your situation. If your spouse doesn't have a job lined up, but you're comfortable with making a large payment, then, we can push approval pretty high. But if you're wanting to stay, everyone's monthly expense is going to be different, what you're comfortable with. With the BAH and Hawaii's BAH, you're able to afford more home than if you're trying to qualify for a different duty station. And if you're receiving VA disability, so if you're not currently active duty, VA disability is income that we can utilize, pension as well, Social Security for those who qualify for it. Those are all qualifying types of income besides a normal W-2 job.
Love it. And can you gross up the VA disability too, or is that something you can't
Yes.
gross up? Okay. 'Cause that was
Non-taxable income, so we can. Yeah,
yeah.
exactly.
Awesome. Love it. So if you're looking at different ways to get approved and you want to really max out, like Ross said, you've got a spouse that works but doesn't have a job lined up currently, can't use that as qualifying income, and you're comfortable with it, we'll help you kind of assess that situation and figure out, is this the right move? You don't want to push past what you're comfortable with. You want to make sure that you have reasonable expectations and you're living within your means, right? You don't want to go crazy and put yourself in a bad position, of course, where you can't feed your family or yourself. You don't want to be, eating ramen for the rest of your life and be completely, house poor.
I like ramen.
or equity rich house poor, right? Or anything like that. You definitely want to set yourself up right. So, we've got an emphasis on that. We're not just going to drive you into feeling like, hey, let me just get the max out of it. So, a lot of that's just in the
Yeah,
planning aspect of it and figuring out what your goals are and what's right for you.
definitely agree with that because I get asked that question all the time. What's my max approval? And I'll rebuttal with, what is your max monthly comfort? Because your max monthly comfort might not equate to the same thing of your max approval. The VA guidelines, we can really qualify someone for a lot more home. You can qualify for a lot more home with a VA loan versus a conventional with the same income, same debts, like a lot more home. But ultimately it comes down to what you're paying per month, and are you going to be comfortable with that? Do you still want to go on vacations? Do you still want to go to the steakhouse dinners every so often? Like Ryan was saying, ramen is good and all, which I had last night. But sometimes you don't want to run yourself into trouble, right? And that's the ultimate thing that we don't want.
Absolutely. All right, let's talk about some common pitfalls. So there's a bunch of different pitfalls. That you can run into as you're using the VA loan, as you're going through the home buying process in general here in Hawaii. But specific to the VA loan, what are some things that come to mind for you, Ross, that you see through the loan process, especially in the loan process? Obviously, I see a bunch that tie into the loan process, but Ross really gets that backdoor entrance and he gets to see what's behind the scenes and what's going on. So, what do you think are some of the most common pitfalls that you see as you're going through the process with VA home buyers?
Appraisals are one thing. You want to make sure the appraisal value is coming in what you're purchasing it for. Not so much in the current market. I haven't seen a whole lot of appraisal issues, but it does pop up periodically. We try to do as much homework as we can up front. So, of course, your offer price is going to be more in Ryan's wheelhouse, right? And he's doing the research on the comps and what the home is currently worth in this current market. And we want to make sure that we're offering within that means. Because if you're offering, you can offer whatever you want. You can offer $1 million purchase on a $500 condo, but it's going to come down to the appraisal. Right? The appraiser is a independent third party that goes to the home and inspects it and to see what it's valued in the current market against recent comps, recent sold homes just like it. And appraisal gaps is one thing. So if the appraisal comes in short or means the value is lower than the purchase price, we get a notification called Tidewater. So the VA appraiser lets us know that we have a value issue and they issue what they call Tidewater. And we have 3 business days to provide comps of why we feel that the value is higher than what they have deemed it so. And hopefully, fingers crossed, that the appraiser sees it our way and changes their value. If not, then you do have other options. You could renegotiate with the selling side to say, hey, this is what the appraiser says it's worth. We're not going to pay for more than that. So, if they can renegotiate, otherwise, buyer could come in with the difference, which is not the most ideal scenario. And then there's another one called the reconsideration of value, ROV. Reconsideration of values, we're going above the appraiser and we're going straight to the VA. And we can provide them comps and say, hey, VA, we believe that this property is worth X amount. Will you see it our way? And if the VA does see it our way, then we get a new value on it. And then we're back to square one with a zero down purchase price. But I haven't seen a whole lot of Tidewater recently. Most, during COVID times when the rates were low and people were, bidding way over home prices, I saw it a lot more frequently than now. But other than that, besides appraisal values, there's appraisal or home conditions. So the VA has minimal property requirements, just making sure that the home is, safe and inhabitable for the veteran and the family. What do we see in Hawaii? Older homes have chipping paint, and if they believe it's lead-based paint, then it has to be corrected. You and I had a transaction, a year and 2 years ago, maybe?
Years
2
ago
years
now,
ago, no,
what?
no, yeah, 2 years ago,
January.
That
January.
Kailua home. Yeah, it was a little older home, but in Coconut Grove, well sought after home, and it needed a little TLC. Unfortunately for us, our buyers were handy, and the appraiser had a subject to in the report. The subject to means that it has to be rectified and corrected, and they'll go back out to reinspect to give it as is condition or an acceptable condition. So rust, wood rot, exposed wood, chipping paint, mold, mildew, things like that. So health and safety issues, broken glass, things like that. If it is found to be an issue, the appraiser will take a picture of it and note it in the report that it needs to be fixed. But you and I try to do our best homework prior to. I mean, I only can see so much in the pictures of the listing pictures, and you always send me back videos and pictures of anything that you think is concerning so that we have that communication. I mean, ultimately, it's up to the appraiser's eyes, but we can do our upfront homework to try to, iron out any wrinkles beforehand.
Yeah, absolutely. And for anybody out there that's listening right now to this video, that's a crucial part of your home buying experience is the teamwork and communication between the realtor and the loan officer. It doesn't matter who you pick. Just make sure that those two people are on the same page. If they're not sending pictures back and forth in sketchy scenarios and not openly communicating, that could lead to downfall for you. So that's why typically the buyers that I work with, they'll go with the person that I'm recommending because that communication is important. Overall, it's always going to be your decision. So don't ever forget that. As the home buyer, you can choose your agent, you can choose who's doing your loan, but the thing that you want to make sure of is that those two parties are communicating seamlessly so that through the process you're getting through it and you're not going to have any hangups. You're not going to be delayed getting into the home, especially being on a PCS timeline. It's critical that all of that happens 1, 2, 3 by the numbers, especially with your TLA requirements going down. I know that pretty recently they've gone, at least in Hawaii, you've gotten less TLA to get into the home. So it's definitely crunch time, and those two parties should not be what's standing in your way of getting into your home. So if I were to give you any sort of advice on appraisals in the market right now, this is not something to take and go to your realtor and be like, somebody else told me this, but things to consider in the market as we are right now, December 2025. If you are looking at a situation where you have an appraisal that came in low, the house is worth less than what you offered on it, you have a lot of ability to negotiate. Overall, you just have to assess. You have to assess the circumstances, but there's not too many that I've seen, especially in the Eva Plain and Waipahu and Mililani, in the military heavy areas in Hawaii. There's not too many scenarios that I've seen where you need to stay and you need to do a reconsideration of value or you need to do a tidewater. Usually, just given the market circumstances, you have the ability to negotiate. It's not like when rates were in the twos and you just kind of had to accept it and pay that appraisal gap and come through. We're seeing a lot less appraisal gaps. They're not absent, right? There's scenarios where you're going to be in competitive. There's a lot of different markets here in Hawaii that it's like COVID never even happened. It doesn't feel like COVID happened when you go to Kailua or Hawaii Kai. I just had a buyer a couple months ago. I think we bid on 4 or 5 properties and we got beat out. Some of the properties we got beat out by $50,000. I don't think it would have praised for that, but those were cash buyers, so it didn't matter at that point. The fact of the matter, there are still competitive situations out there. Just make sure that you're assessing each situation and making sure that you're doing it for the right reasons and it makes sense. Everybody that's actively shopping, if your realtor is not talking about an exit plan and thinking and helping you think through that exit plan when you go buy this house, you need to start pushing that conversation. What's the exit plan if I do buy this house? If I overbid on this house, what's the exit plan? Am I in a good position still? So if you need any help thinking through those, shoot us a DM. Glad to help you out, free of charge, no issue. Maybe we should cut that free of charge part. I think there's some NAR crap that says we can't say free, but anywho, I digress. So Ross, you've been through the lender gambit. You've been with a couple companies. You've met a ton of lenders. You've seen and rescued a bunch of loans. Tell me about the lender mistakes. Tell me what causes these situations where you need to rescue these loans.
I mean, it really depends. It's so scenario specific depending on what they're looking at. It may come down to lender overlays, like we mentioned in the beginning, how lenders have their own rules on top of the VA guidelines, and that could be some issue. I got a call a couple of months ago where a lender, it wasn't my transaction. I got a 911 call from a realtor saying like, "Hey, they won't accept COLA." I'm like, "Why?" So it kind of dumbfounded me. But there's some lenders that have their own overlays for whatever reason, and that could be an issue to get the loan approved. There's a system that everyone uses called the AUS, or automated underwriting system, and there's two main ones that are used. And I got a call a couple of months ago from someone that couldn't get approved, and then I had them apply, take a look at their scenario, ran their numbers. It's really playing with the file and seeing what can be done. And I got an approval, and I let the clients know, and they were kind of baffled of just 3 months ago they were denied for a less cost home. So I was approving them for something slightly higher than what they got denied for just 3 months ago from a different lender, just because they reached out and talked to somebody else and got another opinion. It just really depends on specific scenarios and what's really in the credit report, really. What kind of skeletons are kind of hidden. People will tell me they make X amount all the time and they have no debt, or they have a sparkling credit score, but I only take that with a grain of salt because ultimately it's going to come down to what's in the credit report and how things are being reflected and what we can do to make an approval happen. Paying down debts, using seller credit to pay down debts. We did that a couple of times. Besides rate buy downs, most people are kind of focused on rate buy downs, and buying down the rate can definitely save you a bit per month. But if you have an installment loan, I mean, our client had 2 installment loans that, it was a hefty bill per month. And with the seller credit, we were able to pay off those 2 loans that were he still had 3 years to pay those off, but we wiped it out at the closing. We got the seller to pay for it. And that saved them a lot more per month than
Hmm.
buying down the rate. So even though initially we had shown numbers with, buying down the rate and having a housing expense of X amount, what we did with the seller credit was we paid off 2 different loans, installment loans, which saved up a couple of hundred per month, which then outweighed the savings from buying down the rate on the home. So it really is about figuring out what can make it work and what's going to be in the best interest of the home buyer. The VA loan is the only one that allows you to utilize seller credit to pay off the buyer's debt, which is crazy, right? So closing costs can be paid off, their own personal debts can be paid off, credit cards, installment loans, whatnot. And it all just depends on what can get negotiated, right? It's not a guarantee that the seller's going to pay it off. It has to be negotiated, and that's where the communication between realtor and loan officer really comes in key, because if those two parties aren't communicating well, then they're not going to get the buyer the best deal, right?
Yeah, exactly. I think that as you were saying that, the thing that came to mind was there's not really lender mistakes. There's not lender mistakes that drive it all. And I think I titled it that, but it's really, if you have read the book Extreme Ownership by Jocko Willink, um, it's a personal mistake. It's a buyer mistake. If you choose the wrong loan officer and wrong realtor that aren't in sync, and you don't get the best, the absolute best bang for your buck on what you're doing, because even down to that credit scenario that we went through, and we cut off those couple of debts and saved the buyer more than any rate buy down could have saved them. I think that going through that, thinking back to it, if I didn't know that you could do that, and if we weren't talking back and forth and you weren't telling me, hey, this is how much credit we need to get to pay off these debts and cover closing costs, then I never would have been able to set that hard line for the negotiation, for the bottom line, and really push for that amount of seller credit. And that's inevitably what drove it all, right? Like the communication, just the knowledge between the two of us, both of the loan and the buyer. So that's really what got us there. So, realistically, it's going to be a buyer mistake on choosing the right team and the right people if they're not able to get something like that to work out and it's feasible, right? If you're leaving money on the
Yeah.
table in circumstances like that. But
I think
overall, yeah,
it's I think it's a thing. Well, for most first time home buyers, they don't realize that you can negotiate credits, I think.
right.
And either the loan officer or the real estate agent isn't educating them on that. Because a lot of buyers, if they see the market being a little tougher and a little more quiet, then they think more of lowballing, which is understandable, but you have an interest rate tied to it,
Mhm.
right? And with the VA loan, if you're able to negotiate seller credits and pay off high interest debt, 20% interest, 10% interest on those installment loans, or, 20% interest on credit cards, if you can pay those off through negotiation, and that's where the communication is key. Because if Ryan doesn't know how to put that in, or doesn't know the amount that it's going to be needed to put that into the purchase contract, then he won't ask for it, right?
Exactly.
It's not going to make the deal work. Communication is key, and understanding what your options are and how to really strategize the negotiation to make it smarter for the buyer.
There you go. Let's move into a little bit about one more challenge that I specifically want to talk about, and that's condo approvals. Kind of talked a little bit about earlier the market stats with the condos, right? Hitting on that and seeing how much they've decreased. And I think they go hand in hand, really, the condo approval challenges and some of what's driving the condo prices down. What do you see, Ross, is when you're going through this process? Obviously, like you've showed me the tools to see if it's approved, but what are some of the challenges we see, and what are some of the things that are impacting the condo market the most and causing that drastic drop?
Well, that's going to be a layered answer, but aging condos, a large condo here locally, was it 3 years ago, had a pretty big fire. And so the older condos that don't have fire sprinklers or fire alarms in there are now having to put those in, but it comes at a cost.
Yeah,
Then we
that
have,
cost. Real quick, that cost. I had a seller that was in that process, and we couldn't get the home sold, unfortunately, because of just how the circumstances were. But they had a lump sum assessment of $50,000 on that individual condo, on that individual owner, to install the fire sprinklers. And that's just historically, what you're kind of looking at. Obviously so many condos and so many older buildings needing that. That's going to drive the demand for it. It's probably going to drive the prices up too, I'd imagine, over the last couple of years. So it sounds crazy, but that's the hit. And you don't really get any value out of it other than getting the building back into code.
Yeah, it really boils down to the HOA and how they run it, right? The HOA is a business for the condo, right? The expenses, the reserves, what they're putting their funds into, upkeep, maintenance. It really boils down to how it's managed. And that's where special assessments can come into play, or rising HOAs if they don't have the funds to do the necessary work, elevator upkeep and, spalling issues with concrete buildings. Guidelines for condos. If we're going to condo approval, the VA already has a list of approved condos, townhomes. Anything with HOA needs to be looked at by the VA to say if it's approved or not approved, or approved with conditions. I'd say 95% here in Hawaii are approved, but there are a handful that either have never been through the process of being vetted by the VA, or they're suspended because of one reason or another. And so we want to make sure that, whoever we're working with, if they're looking at condos, I want to make sure that they're looking at approved condos if they're utilizing VA loan. Because if they're looking at a condo and they fall in love with a condo that's not VA approved, then either we're going to have to scramble to see if it can get approved, or they're going to have to go conventional, which would suck. There are a lot of single family homes here that are what we call CPR, or condo project regimes, where someone bought a parcel and built a few single family homes on there. And if it's a CPR or a condo project regime, we just need some documents to have the VA go through and to vet to see if it meets their guidelines. And we've done a few together. But it's not a hard process. It takes about a week or so, depending on how quickly the seller can provide those documents. But as for those big condos and why the values have kind of faltered, that's really dependent, I think, really how the HOA is being managed. Lahaina wildfires kind of threw a big curveball our way with insurance companies leaving the market, which led to hurricane insurance issues, and we can go down the gauntlet with that. That's probably a whole nother chapter of this, but it kind of stems from that, and it's a trickle down of Lahaina fires, the large condo fire that we had a few years back, and coming fixes that HOAs need to do to come up to code.
Love it. All right. So I just put a marker on the thing. I'm going to cut this segment out right now, but just a quick note. We're at 42 minutes now. So just we'll be worked a little bit, be a little bit more concise on sections 3 through 7. Nothing too crazy. If there's anything we can skip by, or there's something that definitely, if you feel yourself going on a little bit, just say, hey, if you need more information on this, DM me or whatever, do a call to action, and then just kind of prompt people to reach out to you directly. And yeah, we'll just try to keep it a little bit shorter, maybe stop at about an hour total. So, hour and 2 minutes might be the marker to hopefully be done by. But if it goes a little bit longer, not a big deal. But all right, 3, 2, 1. Awesome. So let's move on a little bit and start talking about how to use the VA loan strategically in Hawaii. Obviously, using the VA loan is a very powerful tool. It can also be a very harmful tool if you use it the wrong way. So the strategy coming into Hawaii, what are some of the things, from the lender perspective that you can do? And I'll talk a little bit on the real estate side, some of the strategies that we can use. But what are some of the things that you're seeing, Ross, that aside from, well, I guess dive in a little bit more to what you've already spoken about, but that buyers are able to leverage to make the best decision here?
Yeah, I still boils down to negotiations, I believe. What can we get from the seller to benefit our buyer? Besides the purchase price, like we mentioned earlier, seller credits can do a ton of help for the buyer. So you have the team to understand what to do and what to ask for, and how to really present it to the seller and selling agent.
Yeah, all those different credits like Ross just talked about in the last part of this video, those are all different things, and especially the stuff paying off debt, right? Obviously, that's one of my favorites. That's one of my favorites to see. And one of the questions that I have in the intake is, do you have any debts? What kind of debts do you have? And we kind of dig into that. And if you're not comfortable, of course, telling me, Ross is going to be your finance guy essentially for this process. So it's going to come out there, and he's going to tell me what the number is that I need to ask for. He doesn't have to disclose everything to me, but he's going to say, hey, let's ask for this amount of credits if we can, and we'll get that point pushed across. From the actual real estate side, there's a couple different things that you can look at. I know multifamily is a very popular thing across the US. If you can get in a good multifamily to offset some of the costs here, that's hands down one of the, I'd say the second best. I think if you've watched my last video, that's the second best opportunity to really subsidize your income and have an asset under your name. But Hawaii's pretty tough. There's a lot of different challenges you face with multifamily, permitting aspects, if it's multifamily versus multi-generational, things like that. Condition, obviously the cost of rehab, you have to consider that. It's going to be substantially higher here than it will be just about anywhere in the mainland. Ross, on that end, what kind of scenarios have you seen with multifamily? What do you know? What do you know about multifamily in terms of, can you use that income to qualify for the loan? How does that work?
If it's a legal multifamily, that's the precursor there. A lot of selling agents will say multifamily or generational living, but it comes down to what the county has it listed as. One, it has to be a legal multifamily for us to use projected rental income to help qualify the buyer, right? If it's not legal, there's a lot of owners that kind of jerry rig their homes to put a wall up and whatnot, then it's just a normal single family home. If the buyer wants to rent out that room, that's totally up to you, right? You can use that for your personal numbers, but as for mortgage numbers, I can't use it unless it's a legal multi-unit.
Love it. Yeah, that's huge. And when we go through the process, if that's something that you're interested in using or getting a actual multifamily, it's as easy as looking up the tax records, and I can walk you through that. It's super easy to find those tax records and the permitting for those. So if you see a place that looks like just your regular house and somebody's calling it multifamily, it'll be something to question. So
Yeah, there's a lot of those.
yeah. Oh yeah.
It does come up a lot.
It's
It
commonplace
always,
here in Hawaii. That's one of those culture
yeah,
shock type things that you're like, this is legit. Okay. All right. But moving on, I'm going to go into what I think is the third best option. And then after that, I'll touch on the first best option. But the third best option for VA buyers coming to Hawaii, and that's buying a renovation property versus moving properties. And I'm not talking about renovation loan. Ross will give you kind of the rundown on that. And out of every loan officer that I've reached out to, I've dug into many different loan officers and loan officers that are even marketing online that they have renovation loans. I have not met anybody in Hawaii that has a renovation loan accessible to them right now. I've posted on it. If there was a lender that had it, they would be reaching out. They'd be trying to get the business. I'm going to tell you, I have not seen a renovation loan. I don't think Ross has seen a renovation loan available. But when I say renovation property versus move-in ready property, you're going to have the emotional attachment. You're going to see these beautiful properties that are like, oh my God, I want this. Those are going to be the properties that you're unnecessarily bidding high on because everybody wants them. They're beautiful properties. They're great. They're well done. But in a market like this, you're not going to have the instant equity that you might have in a different property. So what I like to tell my buyers when they're going through this process, especially in Hawaii, look at the things you can change versus the things you can't change. You can't change a view. You can't change how many parking spots unless you have the space to do a permitted extension on driveway or something like that. You can't really add more land and just add more parking. There's not a lot of space here to do that. It's pretty tough to do things that you have to do additions for anyway, and they're very costly. So, can you change things? You also have to think about the feasibility of changing things, right? If you're talking about adding on a whole new unit, do you have the funds to do that? Do you have the time to do that? All those different things play a factor. But these renovation properties that I'm talking about, your ideal property that you're really looking at to get the best bang for your buck is the unpopular property that's been sitting on market and it needs some updates, some easy updates. If it needs cabinets, it needs countertops, it needs generally new kitchen, new flooring, new paint. Those two things alone, new flooring, new paint, are some of the best things you can do to increase the return on investment of the property and add that equity in for you. Garage is actually number one. A garage door, nice garage door, little known fact, maybe little known fact, is the top thing you can do to add return on investment or get return on investment out of what your change is, what the renovation is. Going through that process, finding those properties that fit. Now, that being said, there's going to be a line where it can get VA approved and renovation loan. We kind of talked about it, but Ross, what's your thoughts on that? Have you seen any properties that are kind of just like borderline? What are your thoughts?
it really boils down to if you need a permit or not, depending on what kind of renovation it is. If you're just doing floors, kitchen, bathroom, whatnot, you don't need a permit. But if you have to do electrical work or roofing work, that's where you run into issues in Hawaii because the permitting process takes so long. If it's, I've closed on VA loans where a couple of the cabinets are missing doors. The buyer still wanted it. They were going to renovate the kitchen anyway, and they'll still pass the appraisal process. Again, like we talked about earlier, the appraiser is going to state that if it's meeting the safety requirements, stick, is not a safety requirement. So if the carpet is stained and ugly and you're gonna tear it out anyway, I mean, those are the things that you could still buy and put in the hard sweat equity in there to build that value in the home. But ultimately, it's just making sure that it's safe and inhabitable. And that's the biggest issue with the renovation, depending on the level of renovation, is if you need a permit, that's where you're going to get hung up.
Love it. And now the last thing that I wanted to touch on, the number one strategy I think in Hawaii, and it's not for everybody. Not everybody's able to swing it, but if you're a cash heavy buyer and you've got money to come in and bridge a gap, VA loan assumptions are something that I've done quite a few of over the last year, and I've just seen as one of the top things that you can do if you've got $100,000, $200,000 that you're willing to invest into a property, and you're in line with those other buyers that are coming in heavy down. You can do what's called a VA loan assumption. You can take over somebody's interest rate that's in the twos or, maybe low threes. And those gaps shrink as the prices go down. Single family wise, it's kind of staying steady with the cost. So the gap's getting a little bit bigger as the principal is getting paid down in a lot of the more popular areas, but there's still opportunity to jump into something that's got a 2% or a 3% interest rate. And again, that's a select population that can really take advantage of that. There are some secondary loan options out there, but they're extremely strict on getting those second loans. If you're interested in hearing more about that and you think you can qualify, shoot me a DM and we'll discuss what opportunities are out here in Hawaii, because your opportunities are not going to be the same here in Hawaii as they are on the mainland all the time. So we'll get you connected, whatever that looks like. And if it's something you're interested in, let's explore it. Let's figure it out. And whatever you need, anything on assumptions end, I'm happy to help you explore. We just closed a VA assumption with seller financing as part of the cash gap. That was about half of, I think it was about 200,000, about half of what the cash gap was. So that one was incredible. It was incredible to see. And yeah, I think I'm probably one of the only people that I know. I'm the only person that I know that's navigated that. I know nobody else on the island has at least bragged about it. I guess I'll brag about it. I'll brag about it.
No, that's an amazing feat. You should.
It was cool. And it boiled down to the seller and the buyer both being, savvy on it too. That's the important part about seller financing, is both parties being
The
savvy.
stars got aligned.
Yeah. And understanding, like if you're a seller and you understand real estate investing, then seller financing is definitely a way to get like top dollar for the property that you're looking at, because it makes sense for everybody and you can make it a win-win for, all parties if you structure it the right way. So, if that's something you're interested in as well, if you're a VA seller, you own a home that's got a 2-3% interest rate, somebody else that might want to buy it, I can kind of talk you through what that experience was like for my buyer and seller going through that process and doing seller financing. Feel free to reach out, DM me on Instagram. I'm happy to chat. There's some differences in Hawaii, buying in Hawaii, than there is from the mainland. There's a lot, but let's kind of touch on a couple of them. I think that the first one that comes to mind is HOAs and condo rules. Um, Ross, what are your thoughts on that? I know that you've been primarily here. I'll kind of give you some of my thoughts in a bit, coming from mainland and here, but what do you think about the HOA stuff here? Like, how does it differ from the mainland, from what you know?
I mean, it's a way of life here for majority, right? There's HOAs on townhomes and condos and whatnot. To each their own on what the buyer wants, what the home buyer wants. I kind of like condo living, to be honest. I feel safe, secure. Yeah, it sucks that I pay a monthly due, but I'm not worried. I don't have cameras set up and ring camera and alerts coming through when I'm not home, and my wife and kid at home by themselves. I'm not worried. So for me, it comes down to safety and security. For others, they want that freedom. They don't want a neighbor. So yeah, I mean, single family homes are ideal for that as well.
Love it. From my perspective, coming from the mainland, we had a HOA in the
Six
neighborhood that I
dollars?
first bought. I think it was $15 a month, yeah, or $15 a quarter, maybe. It was silly low. It was really
Yeah,
the
that's
maintaining
ridiculous.
the roads and the landscaping and the lights, and really like the small stuff. It's really just the basics, which I'm okay with that. I don't love HOAs to begin with.
Yeah,
I think that, yeah, it's kind of, it's rough. It's rough getting a hold of them. Sometimes they like to fine you and not get back to you. I've had that situation happen.
I deal with them every day.
Yeah. It's definitely more expensive, and especially in single family neighborhoods, you're so much more likely to see $500, $600, $7 a month in an HOA or townhome neighborhood than you are in the mainland. Like you're looking at $15, $20 a month for HOA. Some It'd be like $200-$300 a month. That's a lot. That's a lot for HOA in the mainland, but a lot for single family here, I would say, is about 700. I'd say average is about five, somewhere between 5 and 700. And once you start passing 700, it's like, all right, what am I paying for? You got to question that. Like, am I really getting out of it what I'm putting into it? Does it make sense? And when we're looking at condos, I think townhomes specifically, 7 to 800, I think is a good range that you can reasonably expect to pay. And if you're paying more than that, start questioning, what am I getting for this? Why is it like this? Is it, is there something driving it up? And then when you're looking at high-rise condos, if you're looking at $1,000 a month, that's pretty common. I'm not going to say that's good. I'm not ever going to say that that's good. $1,000 a month is very common right now for high-rise condos, especially with the age of a lot of the condos that are here. Some of the newer condos, you're going to see better prices. You're going to see $1 per square foot, which, I'd say is pretty good overall, especially for newer condos. You're going to get a more luxury feel. You're going to get newer, more modern feels. So you got some lifespan on those. Overall, big difference when you're looking at HOAs and condos and such between mainland and here. What else is
A few
different?
years ago, I would have said that the HOA dues go hand in hand with the amenities being involved. But now it's a different ballgame because of age of buildings, pipes, hurricane insurance coverages, etc. So now there's no linear. The more amenities, the higher the HOA is not the case anymore. It really depends on the HOA board.
Absolutely. That's one of the first things we look at going through the process too, is how old is this building? Is it up to code? Is the insurance is good? What's
I tell
going on?
buyers all the time, you can become part of the board and know the ins and outs of what's happening, be in the know and be a part of why that HOA either goes up or down, and what it goes towards. Takes a lot though.
Going into the next one that I think of when I start thinking about differences between mainland and here, the commute. Well, for anybody that's coming here expecting to live in Ewa Beach and work on Pearl Harbor, people do it. There's a lot of people that do it. But I think the reality of it is there's only three major highways on Oahu. There's H1, H2, and H3. Highway 1, Highway 2, Highway 3. And generally, those rush hour times, you're talking about what? Probably between 5:30, 6 a.m. to 9 a.m. And
We got the
probably,
rail now though.
huh? Oh, we got the
We
rail.
got the
Yeah,
rail now.
I guess usage is going up according to the news, but um, we've got a million people on the island, right? This small island. There's a million people here. If half of that population is generally going in the same direction or moving at once, and you've only got three highways to transit them, that's something to consider when you're going through this search. Is how are those traffic patterns going to be? Like I said, 5:30, 6 a.m. it kind of starts picking up. I try to leave when I'm going towards town a little bit before 5 or 5:30, but up until 9 a.m. it's bumper to bumper traffic. And then about probably I think 2:30, 2:30 it starts picking up to go home. And then that's that way maybe till 6 or 7. You'll start keep seeing the effects of rush hour traffic. But it's just the nature of being on this tiny little island with so many people and such a dense population and only so many highways and ways to get home, right? The last one outside of that's leasehold. Leasehold properties. We won't touch too much on these, but Ross, can you buy a leasehold property with the VA loan?
Yes. In Hawaii, I have not seen it work.
Yeah. So, and it's very strict. So if you're looking at
It is very
leasehold,
strict.
My opinion on leaseholds, I would never personally buy a leasehold. I would never personally see a reason because it's basically a long-term rental situation. So you own the improvements to the property for a set amount of time, but you don't own the fee to the property or really the land that those improvements sit on. So after that certain amount of time that you own that property for your lease, you give that property back to the fee owner, and the fee owner then takes it in. They can do whatever they want with it at that point, obviously within reason, but it's really on them after that. They don't have to give you the property after it's done. And a lot of properties that are in that leasehold umbrella, they don't really qualify for VA loans. So if you want to learn more about leasehold properties and really want to know why it doesn't work, shoot Ross a DM. But otherwise, I would say that's one thing. Just kind of do your due diligence and realize that it's not the best move for a VA buyer.
I've educated many about leaseholds and VA.
Yeah, we don't see that on the mainland. Leasehold was such a foreign concept when I got here, and I was like, oh yeah, it's a great deal, just like every other VA buyer. Like, no, it's not a great deal. It sucks. All right, so let's go into protecting yourself as a veteran VA buyer here in Oahu. There's a lot of different circumstances that you can find yourself in where you're going to be vulnerable, and not knowing the ins and outs of real estate and trusting the wrong person is going to be one of those things. So first, picking the right lender. Ross, what do you think, what would you tell VA buyers to look for in a loan officer when they're looking to use their VA home loan here in Hawaii?
I'd say number one is communication and understanding the guidelines. Once we get licensed as a loan officer, we can do all types of loan programs, but do we understand it is the question. Majority of my transactions are VA loans. I mean, I do conventional FHA and non-QM stuff, but a vast majority of my transactions are VA loans. And, you can go into your local bank and get a loan officer that says they can do a VA loan, but if they don't truly understand the guidelines, then you could be either getting qualified for less than you thought you could, or they may screw up something during the transaction. And that's the worst part is if you get into contract, you do a home inspection, you do appraisal, and 2 weeks in, you find out, something went wrong. And if it's because the loan officer didn't understand the rules and the guidelines or they didn't do their vetting well enough, that's where it runs into issues for the home buyer and stresses everyone out. Stress during a home buying transaction is not the most ideal thing you want to happen. The other thing is communication here locally. With our time difference, there are large retail bankers that have their loan officers in Florida or somewhere else. And when you're live in a transaction, the escrow title team are here in Hawaii. Your real estate agent is in Hawaii. If your loan officer is in a complete different time zone, there's going to be a smaller window of time that they can communicate to get the deal done. And that's going to extend the time that it takes. Ryan, I remember last year you had a transaction with a pretty big VA bank, and the loan officer was saying that the veteran had to pay for the VA funding fee. And I was sitting next to you. I'm like, no, they don't. He's like, I'm sitting right here next to my loan officer. He says that they don't have to. Or
That was almost
even,
exactly a year ago.
yeah, exactly. It was a year ago, almost. Yeah.
I couldn't believe it. Like, you hear the name of this bank and you think, oh yeah, they must know about the VA loan, the ins and
Yeah.
outs. Like, their loan officers
That's
to know because this is the name, right? And
right.
I'm not going to
And
say
that's
the
what you
name,
think.
of course. I
But
don't think I legally can't say the name, but
yeah,
yeah,
that's true to their marketing.
it was mind blowing because even I knew as the realtor, I knew the VA guidelines said that you can put the VA funding fee on top of 100% loan to value. To think that we were getting the property pretty well undervalued too. And they're saying, no, you can't cover the VA funding fee. Like, no, that's not VA guidelines. Like, that's not in the VA guidelines. How do you not know this? Like, what are you doing?
I think that was the same transaction where the loan officer that you're working with, unfortunately, didn't understand the seller concessions either.
Yeah. Yep. That loan
So
officer just ended up
you
leaving
had
us
a
on
double
red.
whammy.
That loan officer left us on red, and that's one of the issues working. This loan officer was on the mainland. That's one of the issues working with some of the mainland lenders. It's like they don't really have much skin in the game. They're not locally tied in. So, if they just drop the ball on you, it is what it is to some of them. And I was mind blown to see that when we're in contract. It's not like the buyer was just unreasonable and they're like, I just want unreasonable things. They were very much like, hey, we're trying to get this closed. And this lender's like, the lender's throwing the hurdles. He's not helping them pass the hurdles. He's throwing the hurdles in front of them. Like, here you go. All right.
I
Well,
think that's the one thing I always stress is that are you a file number or are you a home buyer client, right? That's the difference is really those big banks, they do heavy marketing, but they're just throwing things against the wall to see what sticks. Are they truly looking out for the home buyer? Are they wanting you to have a stress-free time? Are they educating? Are they knowing their role and their guidelines to make it, a stress-free transaction for everyone involved?
exactly. So,
Especially when you're PCSing. I mean, you
yeah,
got enough to deal with already.
exactly. Quick, Ross, put yourself in the buyer's shoes. When you're picking a VA, an agent to help you find the right home with your VA home loan, what would you be looking for as a veteran, as a service member, when you're going to pick that agent?
Reps in. I think that is a telltale sign is if they're able and understanding everything. How many VA loans, how many VA transactions have they done? Is that what their key focus is? Or are they just able to do it?
Mhm.
Right? That's the biggest difference, I think. Understanding the guidelines and the rules is big.
Yeah. I would say too, find somebody that doesn't have an ego. Find somebody that doesn't think they know everything, right? I've seen so many realtors, they try to take everything on, like act like they know everything. You don't have to know everything as a realtor. So if your realtor is not reaching out to the loan officer about loan stuff, they're not reaching out to title officer about title stuff, they're not talking to their home inspector, your home inspector, when we're looking at home inspection negotiations or even renovations, right? And they're not able to put those right resources in front of you and they're trying to take all this on themselves and they're telling you about everything. That should be a big red flag because, if you're a jack of all trades, you can't be a master of one. You've got to be, the real estate agent has to be that negotiator, and they've got to be the person that can get you to the right people. So I think that, above all else, like, you shouldn't be expecting the real estate agent. And I've had a couple people, very few, not too many. I've had a couple people wondering why I can't give them numbers as a real estate agent. And I'm like, well, it's not my fucking job, to be honest. I didn't tell them that. I didn't like cuss at them or anything, but realistically, like, that's what's going on in my head. Like, if you're asking me for numbers and wondering why I can't give you mortgage numbers, I'm going to be thinking to myself, that's not my fucking job. And I'm going to tell you to go talk to Ross at the end of the
And
day.
the one thing too is that there's so much options out there. Just having numbers off of, a website or someone just telling you general interest rates is of no help to the specific buyer. You have a different timeline, you have a different type of home, you have a different credit score. Are you interested in ARMs? Are you interested in 30-year fixes? Is there seller concessions for temporary buy downs or permanent rate buy downs? There's all these options that are really specific to the scenario and the goal.
Yeah, exactly. That's it. So last thing I kind of want to touch on for protecting yourself, it's pretty easy in this market, right? We're kind of headed in a direction where we're still headed in a direction where buyers got a lot of leverage until, the rates do flip, whenever they do flip. There's no guarantee. We don't know when they're going to flip. They're eventually, hopefully going to flip. But the biggest thing I would say right now is avoid the bidding wars, avoid overpaying, right? You can still make competitive offers without overpaying. You don't need to offer list price on everything. And I'm not telling you to go in and lowball everything. Obviously, it all boils down to assessment. It all boils down to assessing the situation, assessing the competition, figuring out if this is the right move for you. But if you're moving to Eva Beach or Kapolei and you're going for one of the DR Horton builds or Eva Gentry builds, they're a dime a dozen. They're cookie cutter builds. If you see something that's renovated and perfect and amazing, and it's got, pretty standard floor plan, you don't need to be the highest bidder and win that property, right? Going back to the things you can change versus things you can't, you can always change the floors. You can always paint it. You can put the kitchen in. You can do all this other stuff. Don't overpay if you can do that. If you can really change something to be what you want it to be, look for that less expensive option. Do it over time. You can manage that. You have the blueprint already in front of you, and it's super easy to duplicate that. And there's no reason to go in and pay over top dollar, because realistically, you're going to pay past top dollar. You're going to pay, something that for the seller really pays them back for their renovation. So that's something to consider in this market, specifically December of 2025. You don't really have to overpay. It's not going to stay. It may not be true next month or 2 months later, right? It's got to be a constant assessment. Wherever interest rates go, that's obviously, it's going to be a very dynamic thing. So take that for context of December of 2025 right now as we're filming this video. But, that's something. And, if this is 6 months down the road or a year down the road that you're watching this video and you're wondering, hey, what should I do? Shoot me a DM. My Instagram will always be there, or set up a Calendly appointment, whatever you prefer. Just get in touch with me and I'll help you assess what the market looks like, and we'll play it by ear once that comes through. But I'm happy to help you talk through things like that. So this leads us all to the question, should we buy or wait? Rates are up. Is it a good time to buy? Should I wait for rates to go down?
Rates have come down.
Yeah, I mean, shoot, from my honest perspective, it's not always the greatest time to buy. It's not always the greatest time not to buy. I think that there's definitely certain situations where you have to really assess, does it make sense? Do the numbers make sense? I always try to tell people to have 2 exit plans. You should be able to rent it or sell it. You need at least one of them. If you don't have at least one exit plan reliably after the amount of time you're going to be in it, you really need to consider why you're purchasing. Maybe it's a retirement home, right? Obviously, there's situations if you're going to be there for 10 years, okay, that makes more sense, right? It's got to make sense financially. But if you're here on PCS orders and you've only got 3 years, you have to get yourself into something that makes sense for you to sell on the back end. It's got to rent out or it's got to sell, one of the two. So that's why I love the renovation properties. That's why I love the VA assumables. That's why I love multifamily. And I think those are the top 3 that I'll, recommend to buyers that are really looking to buy here, because they're the best opportunities. But if you're looking to retire, you're going to be here long term. Hawaii is pretty historically appreciated, especially over 10-year periods. I think 10-year periods are the magic holding period that I look at. I don't want to say magic, but it's kind of historically proven that it'll appreciate at some point over the 10-year holding period. Between that, paying down your mortgage, building the equity, that's pretty good. If you're only here for a short amount of time, renting might be smarter. Especially if you've already been here in Hawaii for a year and you're on a 3-year tour, typically those 2 years, unless you're doing something drastic and you get a hell of a deal on the property, you might just barely break even on closing costs. And that's a risk that, you've got to personally assess and figure out, do I want to risk and do I want to chance the possibility of rates coming down substantially enough to increase the value and give me positive income on the back end when I go to sell the property. And if you're looking at those numbers, obviously shoot me a DM. I can walk you through some of the numbers that I use to help my sellers and buyers, really my buyers plan for their exit plan, right? But realistically, yeah, it really just depends. Context matters in everything that you do. So buying is not always a great idea, but it can be the best idea you ever had too, all at the same time. So reach out, let us help you plan.
Yeah, it definitely is, specific to the person. It's not for everyone, for sure. When you're talking about exit strategy, I just want to add in something on the finance side. A mistake that I've seen for some sellers where they're refinancing, not understanding what they're doing with closing costs. VA IRL or VA refinance is super easy, quick to do, and it saves you money. But it's like sharks in the water because every VA loan holder gets all these postcards sent in the mail saying, I can get you to this rate. What they don't explain is that they're adding all that cost to your loan balance, which eats up the equity you've made. So, refinancing and getting those added into the balance, not a great idea if you're planning on selling soon. I like to educate and make sure that, depending on everyone's goals is different. If they're planning on holding and they want that monthly lower so that they can cash flow, that's one thing. But if they're planning on selling, a refinance would make ideal sense if we're having lender credit to take care of closing costs and not adding it to the loan balance with all these VA refi sharks are doing and not informing directly to the home buyers or home owners that's what they're doing. And when it goes to sell, that just ate up all their equity.
There you go. All right. So I think the last topic we got for you, popular neighborhoods. If you've been looking at Hawaii and you're wondering, all right, where should I live? What parts of the island are the smart ones? Maybe you're watching this video and you heard me say some don't appreciate well and kind of drag down that median sales price, and some of the areas lift up that median sales price. What areas should I be looking at if I'm military coming here? So Ross, let's get your opinion first. Where do you typically see your military buyers buying homes?
I mean, it depends on what branch really, but Mililani is a hot spot for sure, in my view. Single family homes, those values rise. It's a good school district. It's close to Schofield. It's a lot cooler there. That's my hot town for sure.
Yeah, for sure. I think you hit the nail on the head with the branch specific aspect. When you look at the geography, I think if you're in the military, you know it as battlefield geography, right? You put all these little places on the map, see where everything's at. You look at the battlefield geography of it all. You look where your post is going to be. A lot of your army, obviously, your army bases are mostly center of the island. You got Wheeler, you got Schofield. A lot of those tend to gravitate towards Mililani. Some single soldiers gravitate towards some parts of Wahiawa. Maybe Waipahu is another great place for military. Waipio specifically. Koa Ridge is a nice new build neighborhood that we can dive into a little bit later. Those are some of the popular places for Army. Ewa Beach, Kapolei as well. Ewa Beach, Kapolei is pretty universally popular amongst the military community, even if you have a further commute. You got a lot of Army down there. You got some Navy, fewer Air Force, a lot of Coast Guard as well. So you got Barbers Point over in that Kapolei area. But with Ewa Beach and Kapolei, you've got a lot of newer builds. You got a lot more modern amenities. You've got the enclosed garages. You've got the central air conditioning systems, things like that draw military there because it's what they're used to seeing on the mainland. It's a little more suburban feel. You don't have the Hawaii beachy feel. You don't have the city feel. So a lot of military buyers, that's what they're comfortable with. And then Kailua is another popular spot, especially amongst the seniors, like the senior officers. A lot of senior officers go over there, field grade officers, I should say. I've seen a lot of them gravitate over there just with the price points and the desirability. I think some of the best beaches on the island, to be honest. You've also got a good Marine Corps population over there with the Marine Corps base being on the windward side of the island. We don't call it east-west, by the way. We call it windward-leeward. So learn that before you come. It'll help you immensely. So we'll touch a little bit more on the neighborhoods in future videos, but for now, that's pretty much all we've got. If you're looking to explore whether or not buying a home here in Hawaii is going to be for you, go down to our Calendly link, set up a meeting with us. We'll do a one-on-one. We'll talk you through it. We'll talk you about through the home buying process and what to expect coming out here and some of the things that you should also prepare for as you're coming out to the island as well. But we'll help you with everything that we've touched on in the video. Come with your questions. We're happy to get you on the right track and make sure that you get into something that's really responsible for you to get in as you come out to this wonderful market, because it's such a great opportunity to invest in real estate and really just help your generational wealth. Everybody loves that buzz phrase, generational wealth. This is the opportunity to acquire an asset that really can build that for you if you make the right choice. So if you have any questions, or if you're just curious about the housing market out here, feel free to drop us a DM or put your questions in the comments. But until next time, Ross, thank you for joining us. Thank you for all the information that you have and everything that you do for the VA community and the help that you give to VA buyers and sellers. It's definitely not unnoticed. And yeah, any last words?
Thanks for having me. No,
Yeah.
yeah, reach out anytime. There's zero obligations. Happy to chat, answer questions, figure things out.
Awesome. And if you guys are watching and you like this video and you got something out of it, give us a like, shoot a subscription, and follow my channel. We've got a lot more content coming your way. I'll probably have Ross on a couple more different videos in the future, and a bunch of different guest speakers that are going to help you in your journey to buying a home here in Hawaii. But until those future videos, aloha. We'll see you later.
See you guys. Thanks, Ryan.
All right.